Welcome back. Welcome back. Can you guys hear me? Let me know if you guys can hear me, by the way. 7 people waiting is pretty good. Nice, nice, nice. Loud and clear, or how's the music? Music's a little bit loud, or what is it? It's telling me to up my bit rate. Hello, hello, hello. Hello, hello, hello. Can you guys still hear me? I just changed a couple settings on my mic, so yeah, fantastic. Well, Jack, this is the new mic. Like, can you hear any difference? I mean, if there is, then yeah, then I guess it was worth it, right? I guess if you don't hear any difference, then I'm fucking sad, I guess. But yeah, welcome back, guys. We had a members only stream yesterday, which was some fantastic analysis. Obviously, as usual, I'll be going through what happened on the charts. This was the analysis. I didn't trade all of today. Sadly, I was at work in office, which I am also at work in office tomorrow. So I'm again not trading tomorrow. But these are pretty good, right? At this rate, you know, when we do the analysis, we have a good understanding of, you know, what price is going to do in the near future, and it typically lasts for a day, I would say. Um, Sometimes it only lasts for an hour, depends on when it wants to push. But then we can come back to the charts, see if our analysis played out, right? And then we have some better ideas. Yeah, it doesn't pick up as much. That's pretty good. Oh yeah, I haven't unmuted on Zoom, guys. Yeah, this is the Zoom. Zoom should be good now. Yeah, welcome, guys. I feel like I haven't been live for a while, even though we went on Sunday, because it hasn't been that long. But yeah, we're gonna be waiting for another. I might, depending on how many people get here, I might start a little bit early, but I am trying to commit to 10:30, right? Sup Nova, welcome to the breakdowns, I guess. Nah, it's just gonna start whenever, like, I think it's gonna start pretty, like, normally at like 10:30 p.m. London, so standard time. um I'm just a little bit early today, and we also have around 16 people already, so it's not bad. You wish you held the cells. Oh wait, you targeted 1992 but closed way early today. Oh, you didn't hold? Yeah, no, Jack, I had a sell here. I had a sell at 2000. And then I came, like, literally, I moved my stops to break even. I think I had like a sell towards these sorts of areas, and then like my sell was like literally at the bottom here, and then this tiny top wick on this 5 got me out. And then it just started fucking going, right? Like, I think in the future, when I get into one of those trades, I'm just gonna hold and look on like the higher time frame chart, right? So for example, I'm in a sell, right? Once it comes down to here, I'll be looking to just trail my stops. This will be break even in terms of like when the next hourly opens up. So if it breaks, fine. But then I can trail this in terms of this kind of the previous hourly stops, right? I'll keep it here and then just let it run, or maybe the 30 or something, right? So one of these where it just continues to run, and it never broke the previous high. Even this one, it didn't break the highs and it continued down, like with this one. And then here it broke the highs, but then at this rate, how many pips would I have taken total? But also I was at work, so it's probably quite difficult for me to actually trade it. So it would have been a total of about 147. Yeah, massive push today. We'll explain it later on. Oh, is that why you've been catching so many runners, mate? You sold 2007. Yeah, Jesus, man. It was pretty nice. Like, you respected this range here, right? I think on the hourly as well, you respected this range. Yeah, look at this. A lovely respecting. You also closed slightly bearish below. You had no top wick on this candle. It wasn't bad. Like, understanding that this is likely a liquidity grab, right? You had no top wick, faked out back in, grabbed liquidity before going down. Yeah, it's pretty clean. Thing is though, like if you look at these moves now and you're like, oh shit, I missed out on like 100 pips, right? No, you didn't, right? Because realistically, well, at least for me, right, I know I would be closing at 10, 20 pips anyways, right? The max I would have taken out of this entire trade, I would have probably entered the same position around these sorts of areas as it was breaking this low. Then as it's coming down, right, I'm going to be looking to take probably down to this range, max. So what would that be? Like, let's say we got in here, getting out towards these sorts of areas, 27 pips. I'm pretty sure I would have closed full at 27 pips. Welcome, you caught the buy with Dawn and then went back to sleep. Yeah, so I literally like, because I was quite busy at work, I literally didn't see anything, but I had buys above here, right, from last night. If you took the buy above, it's pretty clean, to be honest, to go up. Like, let's say you got in here, right, that's like 40 pips. Yeah, we'll go through this. Like, the analysis yesterday was very, very solid. And it applied all, and it's still currently applying, so it's pretty nice. Yeah, welcome everyone. It's good to see 18 of you back to the live streams. We had an all-time high in terms of members in the Zoom yesterday. We had like 10 people in there. Jesus. So many good questions from everyone. We have a couple new joiners who are actually, it seems like they're relatively more experienced, I would say, when they're trading. Did I take the buy? No, because yeah, so I was at work, right? I couldn't take the buy, but then I got Don's signal. I was in the middle of like a meeting with like a pretty more important meeting, and then I just suddenly got a signal. I was like, oh shit, okay, and I started like fumbling in my words as I was like taking the position, and then I couldn't even like close properly at the very tip. I think, which is where he closed, right? I closed like slightly later at like 2007 point something, 2006. Oh no, it's all good. I didn't take the actual position that I wanted. I think I probably would have caught something like high chance. Like this 15 closed above here as well. Didn't close above here, but once it broke these highs, I probably would have gotten in on the 5 breakout. The 5 breakout was this. I guess this is where Don got in, right? Off the rip. Oh no, I think he got in here off the break of this. Potentially. Yeah. 15 as it was breaking these highs. You're understanding that this 15 bottom wick, I would probably taken this flip here. I'm not gonna lie. Like this, he closed above this wick, right? After grabbing liquidity down here, right? So you're confirming you're bullish for the short term, at least on the 15. So you're gonna come up and at least like this was probably your how many pips was this? From here to probably the next range up, like up to here. It was about 16 pips. Even, what was this? This was about 7, 6. Yeah, it was not bad. Got a couple people on the streams. Welcome. He got in 2005. Oh, okay. Yeah, yeah. I mean, I probably would have gotten it 2005, not gonna lie. But I would be expecting it to fill the range up to around 2009, right? But appreciating that once you get to about 2008, stops to break even, exactly right here, right? So entered, once you got a breakout above here, yeah, it was clean. I'm pretty sure he probably had the same level as I did. And I did the analysis like a couple hours before him, and it still applied, right? Because that's what the markets were doing. Like, it was just continuing to range in this area. So we were looking for the breakout above. And then once that happened, you got this breakout. I probably would have just taken this off the rip because you had liquidity, right? If you didn't have all of this, I would need this bottom wick to come here, potential wick entries or the flip to go. But cool, guys. Welcome back. Welcome back. We're gonna get started. We're on the dot here. So just really quickly gonna recap our breakdown on the member stream yesterday, right? Four main things, right? So I think we were around these sorts of areas, 30th, right? Like somewhere around here. Price was just in this range. We said this range is kind of dirty. We didn't really like it. We were looking for buys above here. Once it kind of broke some of the lows, right? You broke the lows, started closing above. We're looking for the buys here. Caught it with Don, right? Cool, fantastic, right? And then we were looking for sells below here because then you're breaking below all the structure. Hourly close below here. If you caught this, right? Obviously I didn't because I was at work. If you caught this breakout, you know, you're pretty good for at least, I would say 30 pips, right? The wick fill, right? 38 pips. And then you could have closed full or, you know, break even or whatever you could have done, right? And then buys here, right? Obviously on the hour, really clean. On the daily, right? Why did we take a buy here? Understanding that last couple times you drove to these areas, grabbed liquidity before you were able to start pushing up, right? Obviously, depending on how we do the analysis today, it's going to look slightly different, and also daily's opening up. But generally, I would say it was a pretty clean buy, right? If you got into the buy, I'm pretty sure you would have caught like 60 pips or something. What would you? I would have targeted this range, but probably closed full at 86, but that's your next minor resistance. You would have caught, I would say, about 50. Right. So pre-Asian yesterday, the analysis for the entire of New York, you would have caught 3 positions and had 3 dubs. So that's the power of the DonVo strategy, boys. Let's get to it. Monthly. Oh, monthly, you didn't close above the range, right? You also closed right here. It's very interesting, very interesting. Can you get a repeat of what happened here? Top wick start going down, right? Very interesting stuff. But okay, let's jump straight in, right? So the monthly closed. With the monthly close, I would say above here. Above here is good, right? We'll see what this looks like in terms of the weekly and for close above certain ranges or whatever. But we're understanding that the last time price for the last couple of months, right, since June, we were in this range. You could have said this was a fake out to come down to grab liquidity, but because you were bullish, I would actually prefer to say this could have been a resistance, unfortunately. So as that is resistance, you're still in the range. Any given point, right? Next month's candle, I know you guys are gonna hate to say it, you're gonna hate to see it, but there is still a chance. Get a top wick, flip, and then start coming down. You might also not get a top wick. You know, we see this a lot on the 5, the 15, and whatever, but a lot of the times you do sometimes get something like this, and this will be in the form of a fake out. Once you break below these areas, you're probably good down to drive down to about 1675. If you do, right? These are the very high time frames, monthly time frame, but you filled the range now. There's a bunch of things you can do. You haven't broken above, showing that, you know, price still either needs slightly more liquidity to break out, and I would imagine it's probably in the slightly smaller ranges, right? This is liquidity enough for us to probably drive up to here, right? If you said there was like another range towards here, then you had a fake out above, then I'm still expecting this to break up, right? I'm still extremely bullish for the month, right? After this massive bullish candle, which broke the previous monthly 2 months, 3 months highs, right? All of that. And also you broke all the lows first. So there's a high chance you're going to start driving up. So because we now know the bias, right, for the month, let's look at what happened on the weekly, right? So this is the current weekly. We've come down, right? It looks like you did have a level towards 1990, on the weekly, right? Some closures there, some closures there. You had a bit of a fake out right here. It was like, you know, you bullish, came down, closed back above the range, faked out, right? So as that's happening, right, what is the next range you're going to fill? And the next range I'm looking at is probably somewhere towards these sorts of areas, right? Understanding that all of these wicks tapped these areas, right? You don't have any other data, unfortunately, in this zone. But you had a closure above 1990. This is a very strong closure. You could also say potentially there's a level here. So we'll mark this up for now and see what this looks like on the daily. But still bullish, right? Once this weekly flips, if it flips, you're probably good to start driving up. If you do start closing like this, I'd be looking for what happened here. Exactly this, right? The fake out to start going up, because we're understanding the monthly didn't close above the range. We look to get a little bit more liquidity before you're driving up. What is that going to be in the form of? A fake out, a weekly fake out to start driving up, right? So it's aligning already, right? Weekly, monthly, we're aligning. Bullish, right? Cool. Daily. Daily, we had a level towards around these sorts of areas. I'm going to move this down ever so slightly to around here. Understanding that we're in this range. We're printing very nicely in this range, I would say, right? Your first rejection was towards 1981, which we identified, right, as these two wicks. You've closed below this level now, which means that the next area of liquidity I'm looking for price to grab is what happened before we tap this sort of area towards 2046, right? So what was the lowest point at which price tapped before we were able to break these highs and push up? There's just one answer to this, and it is this wick right here, right? Because that is the level which broke all the lows, these lows here, you started pushing up after, obviously, you started ranging again, right? But this, you didn't break this low again, so this was just more accumulation for you to start driving up. Obviously, you can break slightly lower before you drive up, right? Similar to this candle, this wick here, before you were able to drive up to towards 2030. But that's, I would say, where your next support is. So I'm going to put like something around here. Cool. I'm going to move it ever so slightly down. Can I move it to here? No. Okay, move it to here. Okay, cool. 1969, right? So as price is currently respecting 1981, right? All of this, right? All of this here, as it's respecting, right? There is a high chance that you're going to be respecting and it's looking to push up, right? You're very bullish generally, right? Jesus, Jack, you just got deleted. What happened there? What is Nightbot doing? I need to fix Nightbot. I'm sorry about that. But I'm expecting price to come down to 1969 as the next sort of area that price is going to make a decision at. I'm not saying that it's going to reject 100%, right? But I'm saying that it's going to make a decision at, right? So look at this, right? You respected this sort of area and then you start pushing up, right? This, once you're in this zone though, you understand that you're looking to grab liquidity towards these areas at 1954, which we also broke down and it tapped on the dot, right? Similar to this 1981 area on the dot, right? And once we tapped 1954 previously, I then had no bearish bias anymore. Currently though, it's slightly different because you've closed respecting, right? You haven't tapped 1969. Like if you tap 1981 and then you close respecting 1989 instead, then cool. I would be probably completely bullish, right? But because you close bearish and then you're respecting the next range down, I probably need 1969 to get tapped before I'm fully bullish on the daily time frame, right? And it matches up with the 4 hour, the hourly and whatever, right? So currently the daily broke the previous highs, right? And then it's starting to come down. As it's coming down, you're looking for this. This is a liquidity grab, right? Liquidity grab at the top of the range for the daily, which is probably breaking multiple ranges on the 30, the hourly, and the 4 hour, and you're starting to come down. So we're expecting this to come down, but looking at price now, right? You've tapped 1981, you've made a decision towards these sorts of areas. You need more liquidity before you're able to drive down, to drive further, right? So what are we going to be looking for in terms of that, right? So let's draw out some 4-hour sort of zones. So you have a 1983, which is quite nice, I would say. This is slightly more messy, but I'll probably put one there. I have another level here, and then I have another level towards here. Then I have a final level somewhere towards here. Cool. Actually, let me confirm these on the hourly for now while I'm here, right? So I don't have to flick back and forth like 20,000 times. Happy with this. Am I happy with this? This is a slightly more difficult one, this one. This is just a mess. I'm gonna get rid of this. I don't like this area. Unless you have something like higher up towards here, which you might. But I'm gonna ignore this entire zone most likely until we start closing like below here. I'm gonna be looking this to fill down to around the wick fill for 1979, right? And then as it does, looking to fill this wick down here as well towards 1971. But my next real like sells below are probably around here, like a sell below here. Just looking at current price action, right? I understand that with current price, you haven't grabbed liquidity to come down. So if you do come down to here, I'm looking for liquidity to get grabbed to come down. But if price currently is like this, right? You're ranging like this and you're still respecting, bearish candle respecting the support, right? Then you get liquidity, right? I'll probably look for a sell to start coming down because you're still in this range. Any given point, this range will be respected as you did with these closures. Liquidity is going to be a wick to start coming down. So that's what I'm mainly looking for. Oh yeah, Jack. Yeah, there you go, Jack. But cool. Let's look at what happened. So now my 4-hour kind of time frame in general makes a little bit more sense to me, right? I would take this closure likely actually. But I'm understanding that once it breaks this wick, you have this one clean wick to go down. It's so clean. So I don't want to miss out on that, right? Cool. Let's go to the 4-hour now and see what happened in our main zone, right? I'm very interested in this zone because this is what happened when price closed the last time daily closed respecting 1983, right? And we tapped into 1981. You're closing respecting. So I'm looking mainly at these sorts of areas. Like, what did you do? Got a breakout, you closed and you tapped 1971, didn't get a closure below, therefore no sells, right? But if you started rejecting, you start closing above, looking like here, right? Then I could potentially look for some buys above here. Obviously it's a bit weird because my buys currently are below price, right? It doesn't mean I'm going to get into a buy immediately now, but I'm going to get into a buy if 1971 taps. You had a closure below 1983, tapped, filled the range to 1971, then you're starting to come up, breaking above, celery to go up, right? Then I'm looking for the buys to go up, right? And that's why I'm looking for it to tap 1971 because that's liquidity for us to start driving up, right? And is that liquidity for us to start retesting the highs? Maybe, right? Because you've tapped into these sorts of areas, right? But I'm also understanding that like with the previous time that price was in this range, you spent a bit of time here. Like you didn't just kind of you didn't push out very quickly. So that might happen again this time. I'm expecting it to drive relatively aggressively outside the range. But we'll see, right? We just react to price. But I would also say, let's have a look. So for example, with these, right? You have this closure here, no bottom wick here. Start closing above. I'd probably even get in on the bottom wick here. Once you close celery there, that was so clean. Bottom wick breaking all of these lows. Yeah, the wick entry here would have been pretty nice. So potentially even a wick entry towards these areas, guys. I'm gonna say towards here. And it's gonna look really weird, right? Because I currently have some buys which are below price, But if you guys understand the analysis, that's the most important thing, right? And then as you get closures below 1971, we're looking at these, right? Boom, straight down to the next range, which is how many pips? Let's have a look. Say you got in here, right? Such a bad entry. Your break even is 23 pips, right? And then your full position, that's 140. You're solid, right? You're taking some pips, you're fine. But this is the 4 hour, right? So at any given point, I would need that breakout above 1984 first. What does this look like on the hourly? Let's have a look. So looking at this specifically, right? So on the hourly, you probably have a slightly smaller range somewhere like towards these sorts of areas maybe, or like, is this the top of the range potentially, I would say? Yeah, you probably had a range around here, or like around here. Yeah, so I would say, right, generally, I wouldn't have taken the wick in this case. I would have taken the flip. Why? Because you closed bullish above, bearish below, right? Any given time, any given point, this is a fake out because short term you're bearish, right? Then you started doing this weird shit here. Then you close below, right? At that point, you don't know if it's just continuing bearish structure. So as you start coming up, flipping, I'd probably look to take an entry around these sorts of areas to start driving. Look at these, right? No bottom wicks on these two hourly candles because you've grabbed liquidity. That's why we go off the rip, right? Off the rip, straight up, and then you're pretty solid. Like even if you took it here off like the break of like, let's say this high, right? Break of yeah, as this flip, let's say you got in here, you were in drawdown for a little bit as it was creating a bottom wick, you know, a 35 pip kind of drawdown. Then it tapped your next level at around 40 pips, filled the rest of the range to a 70 run, and continued to run for fucking hundreds of pips, right? So it's still a pretty good position, but it's either the buys or I would say I'll keep the breakout because it makes sense on the hourly for the breakout. So am I gonna move my breakout though? Can I move it? Yeah, I'm gonna move it slightly, guys. Just a little bit. Towards these sorts of areas, I'd say. Actually, I'm gonna move it here. Oh, ever so slightly lower. Ah, it's fine. It's basically the same area. Anyways, 1985. I'm pretty sure that lines up with what we have currently. 1985 is a pretty strong level here as well, right? It's not bad. You're respecting, right? On the 4 hour, you actually broke in terms of a closure. So if this 4 hour flips, you're pretty good to like. Oh, sorry, if this 1 hour flips, after breaking all these highs, this could be liquidity. You could look to take the fake out, or like once it starts closing below here, for this wick fill, which is about 42 pips. High chances will happen. You're bearish. Don't wait. Don't take the wick entry here, but potentially look for this flip because, well, not now, right? You'll wait for this hourly to close because you only have like 13 minutes left. But if it's closing like respecting this, right, or if it closes respecting 1984, even better, right? We'll look for the top wick, and then you can probably get wick entries to start coming down. If you close here and then it starts popping, I'll probably I'll look for the break of these lows instead of just the flip. The difference of that is probably like 5-10 pips. Yeah, like 5 pips, but it's worth it, trust me. Long term, you want to be in a position where you're understanding that this trade is higher, like there's a higher chance of it playing out. I'm just having a look, right? You haven't tapped 1971, so I'm looking for sells till we tap 1971, right? As I said on the daily, right? We're understanding that we're bearish until we tap these sorts of areas, because then at that point I'm bullish to retest the highs. So how do we get there? And these are the sells to come down, because I'm understanding after we need to tap 1971 before these buys are valid. These two levels are only valid once you tap those levels, right? So what does that look like in terms of positions? This hourly, if it closes respecting 1984, ideally I'd get a breakout on the hourly to come down and break this previous low and then close below 1983. What does that look like for those who don't understand candles and can't imagine candles all drawn out, right? So let's imagine this candle now closes somewhere like this, below this level. So let me just redraw this, but like something like this, right? Or it closes like this, the top wick currently that's like this, right? If it does something like this, next candle comes up, creates a top wick. I don't need it to break. I don't think I'll need it to break, but I'll take the flip. And as it's flipping, right, I'll look for a full closure towards these sorts of areas, anywhere in like these sorts of areas, understanding you tap this level, probably have some other levels like around these areas, but I'll be looking for the flip to come down, and at least I would say I wouldn't say at least, like there's a high chance it's gonna tap 1978 or wick fill at here, right? And then when that happens, you'll probably be able to close full. How many pips is that, right? The flip of this is like 37 pips. Going break even 24. You might even get break even slightly because this is the hourly chart. So give me a second. Let me just get rid of bloody annotations. Yeah, so let's have a look on the 15, right? What is it looking like? Oh, this could be a fake out on the 15, right? Similar to this. But I needed to break these lows, right? Then it would make sense. Probably looking for a sell, a breakout below these sorts of areas, I would imagine. Somewhere like these sorts of areas. Yeah, if you get like a breakout below this, pretty strong to start coming down. Like even this, how many pips was this? This is 10 pips. Yeah, this would be your break-even point. Right? So I'd be looking for a sell to come down, break even here, but understanding that I'd like these sorts of areas to get tapped. 1985 towards 1987, potentially even up to these sorts of areas at 1989. Have we tapped? I'd like it to break this high. That's it, right? If it breaks the high, I'll look for a sell off the rip here. If it doesn't, then I'll look for a sell once you have a top wick and then you start coming down. Break-even point, I just determine it based on where it's likely to reject. Right? I'm looking at this candle. There's a chance price will reject here. Looking at this as well, right? You had some sort of rejection. I don't want to be in this rejection. So that's why I'm going break-even there. Cool, guys. Basically, that's the analysis. We'll just watch it because I can't trade tomorrow, sadly. But I'm just going to watch price. I still get a lot from watching price. So cool. I'm going to let the Zoom boys roam free. But welcome back, guys. Welcome to another day. Sup. Did you guys take any of the trades from the analysis last night?
I didn't take any, but I was at the gym and I set an alert for 81, and then I checked it once I got the alert, and then I was like, oh, that's cool. And then I checked it like 30 minutes later, and I seen we were up like 50 pips.
Yeah. But it's good, right? Like at least you have the awareness, right? You're looking at the charts. You're understanding this is a likely place it's gonna, make some sort of decision at, and you just watch it, right? Then it's just you're still gathering experience that way. So it's pretty good.
I took a trade on the 1 hour flip after 1981.
To come up, right?
Yeah, but because it was so bearish, I was worried it was just going to do I wasn't sure if it was going to keep pushing down or not.
Yeah.
Which is why I
So you got in here
for it to flip back. Yeah. And then it went up like, I don't know, I think it rose like 20 pips or something.
Yeah, 23.
I moved to break even.
Yeah, and you hit B.
Yeah.
Yeah, that's fine.
I hit like 5 Bs today. It was good fun.
Yeah, no, that's fine. Like if you're able to hit 5 Bs, right? It's showing that you probably went B at the right places, right? Because if not, you would have lost 5 trades.
Yeah.
So B is a good thing.
I think I lost one on a 4 hour flip as well. Coming on the way down from 207. So I was in cells at some point.
Like towards,
back down.
I don't know, these sorts of areas?
To the right, I think. It was like the 1 candle or something, because it was on this flip, it flips bearish and then went back up a bit.
I see.
And it hit a
Oh,
stop
here?
loss. It was during the candle movement.
Oh,
yeah,
it was this where you had this
no.
1 o'clock, right?
I think it was definitely on the way down.
Okay, so
It's moving. It moved within the candle body somewhere.
oh, this one probably, and then it went back up.
Might be
Oh,
this.
okay. Yeah, fair.
On the 4-hour flip, yes.
Yeah, the thing is, like with something like this, it's already filled the range, so I would have probably closed full, like regardless, because like it filled the range, and then it's looking like it's starting to reject, right? Your previous 30-minute, even though, right, you're so like you're very like we're expecting it to come down, tap certain levels, 1981, right? But you're expecting that price in the short term is bullish. I don't know if it's going to come and fill the range towards 2009, 2010. Any given point, this could just start driving up. It might close above and then grab liquidity to go up. So once it taps like these sorts of areas, like yeah, I'd be out full.
Yeah,
I would say,
and then
yeah.
the next two across, this one that closed on the 1992. I took a sell on the bottom of the after it closed on that.
Yeah.
And I had my stop loss at like the level you've got there, and it just tapped it on the next hour candle before coming down.
Fair. Oh, this one here, and then it just came tapped.
I took a sell on closure.
Yeah. Fair.
It toppled too much.
That's all good, man. But like, you know, it ran also like you had this entire you went break even at the right time, right? Because like this entry gave you 40 pips, bro. Like you didn't close.
No, I entered after on the closure.
Yeah, but I don't know what time frame you entered. Probably like
on the hour, I think.
Hourly closure was here.
Yeah, maybe it was the 13th. I can't remember too much. It was something like that.
Yeah, but yeah, no, fair enough. Like, I think generally once you close below 92, you just look left, right? What happened last time you had 92 traffic, right? You just straight down. So
yeah, it's just it came back up and hit the stop loss at the top of the level. So,
yeah, unlucky.
And then obviously drove down like crazy.
yeah. It's nuts. I'm expecting it to continue driving down, like for sure. This hourly, I don't know how it's going to close, but it's looking like it's going to be a pretty strong. Like if it closes below this, I'm expecting it to come down towards these sorts of areas first, anyways, right? Retest those before you're able to go up. So if you create a top wick first for the next hourly, could be looking for some flips to come down. But flips, because it hasn't broken these highs, once it breaks these highs, right, should be pretty good. Like if you close like this, whoa, that'd be quite nice. But if you close below here, obviously, if you get a weird closure here and then you get a closure below 82, yeah, it should be gone. But this 5 is rejecting pretty hard. 15's faking out, coming down. It's not bad, guys.
If you would have took that position, where would your stops have been?
Which one? Which position?
81.
81?
From earlier.
Yeah. So 81, right? Let's say... Let me mark up the exact 81 level, right? So pretty sure it was like here. 81.7 or whatever it was, right? So let's say I got into position 81. Be looking at what happened last time, right? Last time with these, right? Where's the next level you're going to reject at, right? I mean, you could reject towards these areas, you could reject towards these areas, like, and then we look at, you know, what the kind of pips are looking like, because I don't want to risk like 200 pips, but this is looking pretty good. It's pretty juicy, right? 130 pips right here. So I probably have a stop loss level around here, like just around here, like just below these wicks as well. Probably just under this wick as well, right? Just so it has every single chance it can to reject, right? These wicks, you haven't tapped this level, right? Pretty nice. And then once that happens, yeah, I'm like it's all the way. Oops. But here, right? And then what does this show, right? You're under all of these wicks, right? Your next rejection area after 81 is probably towards like 78 sorts of areas to 76, and then the next rejection area is probably close to around 72, 71. So you have 3 different areas for rejections.
Right.
Yeah.
And then if you hit stops, you just automatically assume it's just gonna be plain range.
Yeah. Well, if it starts closing against us, like on these sorts of closures, then I'm expecting price to start driving really against us. So even if I do get into a pineapple towards 71, I'd be looking to get out break even, or like break even for the first position and profit for the second, right? Because you're closing bearish against us, sorry, yeah, you're closing bearish against us because this is a long trade, right?
Makes sense.
Yeah. How is the hourly gonna close? Closing right there. 15 has faked out. You're creating a top wick first. You'll probably see a 15 wick fill, guys. I'm not gonna lie, but I don't know how steep this top wick is gonna be. It's only 8 pips. Not worth it. Just wait till Wicks to stream. He will be streaming, so it's fine. Yeah, that's basically. Do you guys have any questions? I guess.
I think Tom does.
Yeah, I had a quick one. So I mentioned this before, but like the difference between a liquidity grab and break the structure. So I was thinking, is the liquidity grab a bit like we're closing respecting a range? Let's say we were like bearish.
Yeah, Tom, I have the perfect example for you today, right?
Okay, good.
Look at like price currently. Price currently is fantastic in terms of explaining this. Look at this, right? We're bearish, right? But we're respecting this, right? But we've broken the lows on the wick, right? And we haven't closed above. Any single closure on the wick, body, or whatever has not closed above the previous, right? All of these haven't broken this high. Then your 4 hour came and closed respecting again, right? You didn't break the highs, you closed respecting, bearish, right? So I'm basically still bearish, right? I'm not expecting this to suddenly break the highs, because if it is, it's going to need to grab liquidity towards these areas to go up anyways, because it doesn't have enough liquidity to go up, which is why it's slowly coming down, right? So once you started breaking these highs, but then you started flipping, right? So I probably would have taken the flip, which is why I didn't get in towards this top of the candle here. But this is why, like, you're closing bearish, you're kind of closing below these areas, you broke this, so I'm bearish. And then you, on top of this closure, where the 4 hour close respecting everything, I'm very bearish, right? Especially on the 4. So look at what happened on the 1. The 1 was closing bearish below all of this. You didn't break out, so it's slightly conflicting on the 1 hour. But after all of this played out, right, then your 4 hours started flipping. I'd say you're very bearish at that point. And then once you started closing below these sorts of areas, you're bearish. And then you can understand this was the liquidity grab, right? And then this was the fake out after you closed respecting. So your 4 hour, in terms of like a chart and like how it looks like for bearish structure plus liquidity, is the cleanest you'll probably seen it.
Yeah, okay.
Yeah.
So then, for like the flip side, if instead you were looking for like a break of structure in this scenario, would that be sort of like a close above the previous resistance?
Yeah. So.
And then we saw the break of the lows and continue up.
Yeah, multiple things that can happen, right? So for example here, right, you get this closure, you have this bearish closure. Say your next candle closes like this, with the top wick, with the bottom wick, right? Let's say your bottom wick's like somewhere like this, right? And then your next candle, bottom wick first, breaks all these lows here, starts flipping, right? At that point, you'd probably take the flip, right? Because you're understanding you've broken all of these lows. So if at that point it doesn't drive down, which like at this point, right, when the candle is here, it's very bearish, and if you were to push down, that's probably your best chance of pushing down, but you didn't, you flipped. So you're likely going to start driving up because you just got this closure that was above this range, right? So you're looking to fill the next range up, which is towards these sorts of areas.
Okay.
Yeah?
But the key difference here is basically like the history of the move. So like if you're respecting in the same direction, and then
sort of like the opposite direction liquidity grab you down.
Yeah.
Like closing against it, that's more likely to sort of break your structure.
Yeah. So for example, right, like the 4 hour looks looks very bearish for us. Hourly, right? Hourly, you came down, you broke these lows, cool. You could be bearish, right? Then you started breaking these hourly highs, but you had no top wick, right? And you didn't break all this. At this point, I was still like, you're still respecting this range here. Still bearish, right? But once you had this, right? If you wanted to start driving down, you would have, right? You would have started driving down. But because you didn't, there's only two cases. Either you're not bearish, or you don't have enough liquidity to drive down, right? So in this case, you were bearish, right? Because you had the liquidity to come down, but that's why you needed this. So we were expecting liquidity to get grabbed. But if you were just here, right? If I just have a replay like this, I'm very bullish currently, right? You just had this fake out closure above, right? On the hourly. So I'm looking for this to fill the next range up, which is up to these areas, right? Which is why I think we were looking for stops to break even towards these sorts of areas. Because this candle didn't fill the range, so next candle we're expecting it to fill the range. As it's filling the range and then it's coming down, we're understanding that, okay, cool. Your hourly is closing below this, so there's a high chance that this on the 4 hour is a fake out and a wick, right? And then as that happens, your 4 hour then aligns really well, right? You've started coming down, you're closing bearish below, and you just got to start driving. Right, so your hourly made sense up until I would say like this point here, like a bullishness in terms of short-term buys, right, made sense up until this candle closure right here. Once you broke all the highs, then you closed bearish below this range, back into this range, I would assume you're probably quite bearish. Right, there's no reason to come and break these lows and come back down. Unless you then get like a flip and then you'd probably look for fake outs to start going up. But you also did already grab liquidity. Right, you grab liquidity here for the buys to go up. Alright, so I'm not expecting another fake out to start going up again. If anything, this is the 4 hour flip and then it aligns with the 4 hour. Could have come down. Yeah?
Yeah, that's really useful. Thank you.
Yeah, it was just so happens, right? Price printed the exact thing I wanted to answer today, so it worked out well. But yeah, that's what I mean. Like, yeah. So
could you have took so say when this hourly closed, could you have entered off the rip?
Oh,
as
which?
Soon as
Sorry,
the
I
next
moved the
candle
charts.
opened?
This one?
No, yeah. Once it closed right here, bearish. Yeah.
Oh, this one? Oh, I would have taken this off the rip, brother. Like,
Yeah.
fully off the rip. Why? Because this. You just had a massive liquidity grab here. It's not just going to break the highs and then break the lows for no reason. Especially on this 4 hour chart.
It closed below the range too, right there.
It closed below the range. It closed below this range on this hourly, right? Filled, right? You tapped this bottom of the range, then you broke that range, right? So indicating that this liquidity was enough to fill the range and break the range. So there's a high chance you're just going to continue to fill the next range down. Right? And then you obviously had enough liquidity here, but that's why we were expecting 9081, because at any given point, this 4 hour move is just the daily making a bottom wick. It's just the weekly creating a bottom wick before it flips and then starts driving up. Yeah? Like, I'm expecting this. That's why, like, look at this, right? 1971, pretty aligned with this wick here. These levels here. Because once you tap this is the place price tapped before it was able to retest these highs. That's why I'm expecting price to come down towards 1971. That's the same.
What was your reason for having the sales below closure there then?
Because that's if you essentially, like, for example, right? So let's say on the 4 hour, this is like if you don't get into, like, you need structure to take the buy here. I'm not taking the buy here because currently you're closing below certain ranges, right? If you do come down, there's a high chance you might even start breaking below, right? So what I'm doing is, actually, I'm going to use the annotation tool.
So we need to range first, right?
Yeah,
Then
exactly.
go down, grab
So,
liquidity.
for example, like say we come down, cool, I'm very happy with this, this is fantastic, right? But let's say we respect, right? Fucking price is respecting this area. Cool, and then it's really liking this area, man. It's like it's respecting for the next, like, these are 4-hour candles, these are big candles, right? It's just respecting. You're like, oh shit, is it gonna break? And then psych, aha, I'm coming up again, right? If it does something like this, and then it just comes down randomly, right? You're respecting all of this. So I'm expecting this to flip. And I'll be looking for this buy. That's the only scenario I can take this, right? So just take a mental note of this. In fact, I'm gonna make a fucking screenshot of this real quick, and then I'm gonna show you something.
Just a question on this.
Yeah.
Would you be entering on rip on 1971 or on the?
For this one, I'd be looking for this. Yeah, the buys, 100%.
Yeah, the buy and spam.
Yeah.
Your entries were on the wick tap or the.
I would say on the wick
flip
tap.
itself.
Wick tap probably is pretty good here. If you're constantly respecting all of this, like actually, I would say there's a small differentiation. So, for example, with this, right, I would need this candle, this previous candle, to close above this. If it does this, next candle does something like this, I'll be looking for this. Why? Because most recent, you've broken above, right? Your wick broke above. So you're not just going to break above for no reason and then come down to the very bottom of the range, right? You're breaking above, you're showing that you're probably bullish. Ideally, you get a closure above this level, above 1985, right? Then I'll look for that bottom wick to come down. But you're a little bit far away. If you do get a breakout above here, right? If you get something like this, I'm not expecting price to come down to tap these areas. It's probably just going to tap like somewhere below these lows and then start flipping. Probably get something like this instead. You're not going to tap 71. Yeah?
Yeah, okay.
So just remember what all of that was. And then now look at this. Alright? Actually, look at this. Yeah, so look at all of this, right? So you formed all of this structure, right? And then you started, you didn't get a closure above, you didn't get a closure all of this, but I was still looking for the buys. That's 81, right? Why? Because you're respecting this. On like the most recent kind of like structure, this isn't structure, this is just the drive, right? Until you get structure, I can't take the buys here. Does that make sense? Can you guys see this?
Repeat that. Repeat what you said.
Can you guys see this, by the way, on the zooms?
What?
See what?
The snipping tool.
Because
Oh no.
No? Okay, let me share again. Can you guys see that now?
yeah.
Yes.
Yeah.
There you go.
Right? So look at this. This and this. Same thing has happened, right? Respecting. Right? I'm expecting price, once you've closed respecting all of this, I'm expecting some drive up, right? Similar to this, right? I'm expecting these levels to get tapped. Why? Because I'm understanding that you're respecting this, any given point you can start driving up. Similar to this is why I was looking for the buys at 81, because you're respecting these levels. If you had this range that was being printed, if you come down, it's likely you're going to need to grab liquidity towards these areas before you come down anyways, so the buys here are valid. But if you didn't have this range, and then you just took, like, as price was currently, like, as it's just printing bearish now, if you start coming down and you just start taking buys randomly, it's a high chance you're going to get stopped out because you don't have anything you're respecting, right? This is just this.
So will we still be taking the buys even though we've got the closure below? So it's anticipating that that's a fake out closure below?
At 71,
No, so if you bring up the picture,
yep,
so we were ranging and then you said that you're looking for the buys because you're anticipating that large bottom wick
yep,
to then flip up.
yep.
But now we've closed below that range.
If you close like here,
Yeah.
oh, then there's no buys. I would probably be looking for the sells instead. Like, I'd be looking top wicks to get sells to come down.
But then the sort of 1985 levels,
Yeah.
those were after we had the closure below the range.
No, so these buys are after you tap into this, but you're respecting potentially certain areas, right? Like, for example, I would say the buys are only valid if you come down, like, for example, to, you do something like this and you start coming down, like, range like this, right? And then you suddenly get a buy. For this buy, I would need a bottom wick and then flip. For these buys, I'm just going to go straight up.
Okay.
Yeah? Because I'm understanding if you've tapped into here, but you're respecting this, I can't get into a buy. Because at any given point, right, there's going to be a wick fill to come down, and you're still going to start breaking below. But if you get a range towards these sorts of areas, right, and then you potentially even start breaking these areas and then start coming back up for these, then yeah, I'll be looking for that. I think we were looking for the 1 hour play previously. Let me just try to go back. Oh my god, it's so laggy. It takes me like 3 seconds to scroll. Oof. Yeah, I was looking for this, right? So as you come and tap 71, right, you're looking for this stuff to get, these ranges to get printed, right? You have this closure below, right? You look at this, right? You're respecting this. Like, just compare this to what this is. All of this, right? You have a range, come down, you're respecting the range, you broke above, right? Just came down randomly, right? I'm expecting a buy. Why? Because I'm like if it wants to drive down, it's gonna grab liquidity. Look at this fucking huge wick all the way up at 1987, right? That's probably full TP at least, right? This is why this and this is the same. And then after these buys, if you didn't get into these wick buys, right? I'd be looking for potential breakouts above here, right? Because you're respecting these sorts of areas previously. Come down, this is liquidity, well, understanding this is liquidity. The thing is, once you got this top wick though, and then it started coming down, it'd be difficult. But then once you start breaking back up, you had a celery, right? Be looking to take the flip here, potentially even this flip here, at 82 to come up to 80, 85 for about 30 pips, right? Because you're understanding that at this point, right, price has tapped this level on the daily and the 4 hour, which is liquidity level for price to make a decision at any given point. Price can now start pushing up and retesting the highs. So I'm just going to start looking for those buys to start going up, and this is a higher time frame liquidity grab for us to start retesting. And in this case specifically, you didn't retest until a couple days later, right? Like, look at this, right? You just started pushing randomly here. Yeah, you tried once here, you came back down. I guess this was another liquidity grab to start going up, but that's kind of what price just does. You range for a while, you break out, and then you start just going up. Does that make a little bit more sense, guys? Like, I'm not expecting everyone to be experts at like after. It's like it takes a while to get used to.
Yeah, that actually makes a lot more sense now.
Yeah.
Or that snippet example you're showing.
Yeah.
If instead of it making a bottom wick, if it went up and made a top wick first, but without closing below that range, but then it closed after a top wick, could you then sell, or would you need the closure before the top wick?
So you're saying if this candle happened but it had no bottom wick?
I think, yeah, if it went up first towards like 86, and created a top wick, and then went down and closed below, would you then, is that...
And then close below here, then I'd probably have a sell off the rip, depending if it broke all these highs.
Yeah, if it broke all the highs at first, but you wouldn't need the closure below before the wick, would you? Or
I would need the closure.
If you're gonna take the wick entry, right?
So there's two ways you can get it, right? So if it created the top wick, right, and then closed below off the rip, right?
Okay.
If it closed below without breaking the highs, I'll wait for a top wick and then flip.
Okay, that makes sense.
Does that make sense? And do you understand why, right? Do you understand that that's just another level of confirmation so that you're in a trade that's going to be more likely to play out? Yeah? Because you broke the highs. Once you break the highs and then you break the lows, it's likely that you're going to drive down.
Yeah.
Because if it's broken the highs and it didn't drive up, right, then there's no reason for it to then suddenly re-break the lows, then re-break the highs. Because it doesn't just do that. Price never does this. It doesn't just like start like fucking doing this, right? You never see this.
Yeah.
You have structure like in the small time frames. Like, look at this, right? You came up, right? Came down, you were looking to come up, but you didn't, right? So you came down lower and then you grabbed more liquidity, go up, cool. Came up and then you started to trickle down, grab liquidity, now you're coming down, right? For example, with these, you started coming down, right? And then you started going up after you grabbed liquidity, straight up, right? Stuff like that. It's just, you never break highs, break lows, break highs, break lows consistently, I would say.
But if we broke the lows on that snippet example,
Yeah.
if we broke the lows.
These lows or these lows?
Yeah, those lows.
Yeah.
And then we flipped, but we closed, still respecting that range. Are we anticipating that the range will get broken to the upside, or
so,
the fact that it broke the lows and then
yeah,
closed?
that's a good point, right? So if you're breaking all these lows, right, but you're still closing respecting, I would say, this range here, right? I would say it almost indicates you don't have enough liquidity to break. So I would be looking for the next candle to break above, right? Once you get that breakout, then I'll look for a bottom wick, buy stop to go up.
Yeah.
Yeah? Is that aligned with what you're thinking?
Yeah.
Yeah. And yeah, I guess if it aligns to what you're thinking, it makes sense, right?
Yeah.
Cool. Safe, guys. There's some fantastic questions tonight, right?
Elvis,
So,
that's like for 1971.917, what was the scenario for if you do like what's the sell below closer scenario? I must have missed it.
sells below is if, like, for example, you just come down, right? And then you start, like, probably I would say you're ranging in this sort of area, and then you grab liquidity somewhere around these areas and you start coming down, and then I'll be looking for the sells off the rip there. Scenario 2 is if you start coming down like this, break out, right? And then if you get a seller rate, cool, then you're coming down. If you don't, then you get a top wick, looking for the flip to come down. Does that make sense?
Yeah.
I think I'm starting to understand the flip more.
Yeah.
Like off.
The flip is strong, right? Because there's no reason for it. Because if you understand, like, breaking highs and breaking lows, then the flip makes a lot of sense, right?
Yeah.
Yeah.
Yeah, so like you said, if we move up and break all the highs, and then we reject and come back and flip, then there's no reason to actually retest that high again.
Exactly.
Probably push
Exactly.
it lower.
Like, look at this, right? So, for example, you came up, cool, you rejected. This is your first rejection, initial rejection. Came down, you started ranging. You came down to these sorts of areas, 64. Is this enough liquidity to break up? No, it wasn't, right? Cool. So, the next time it taps 64, I'm not expecting it to break the range up to these areas and then break up, right? But once you got this, cool, I'm now very bullish because now you've broken out of this range, and this range is 54, right? So yeah, this point exactly was where we analyzed that price needed to tap on the daily for us to start retesting the highs. And then the next couple of days, 24th, 25th, 26th, you start re-breaking the highs, right? Because this is liquidity for you you broke the lows, right? So if you now break the highs, high chance you're going to drive, right? And I'm talking about these highs here, not this, because this was a catalyst. I think it was like just news. No, this was just like 2 Fridays ago when it just pushed, I think due to the war. But like it's like even during the war you still have price action that plays out. Cool, guys. Any more? I'm gonna try to mute Maui and Tyler. Y'all got any questions? If not, no? All good?
No, I'm alright.
Yeah, nice. Yeah, no worries if you, like, some days you might just look at the charts and you just have like a shit ton of questions. Some other days you might just look at the charts and be like, okay, that makes sense, right? Things make sense. It's difficult to ask questions, right? But just, when they don't make sense, just, ask away. Just don't be shy. Cool, guys. I think I'm probably going to end it here then. Immense value dropping, right? Like, I feel like you guys are all coming up to speed in terms of understanding liquidity, understanding price action, what price typically tends to do. The next step, I would say, for all of you guys is even me, right, is experience. Like, we need to watch the markets play out month after month after month, year after year after year, and then after that, we'll just look at a setup and be like, yeah, that's just what price does, right? We're expecting price to just gonna, it's gonna look, it looks like it's gonna drive, right? And at that point, it's just a gut feeling, right? And then you're trading off gut feelings. You're trading still with like a plan, but the plan is so like engraved into your brain that it like you don't even have to think about it. Like that's kind of how Don trades, right? He just wakes up and he's like, oh, it looks like a buy to me, and then just enters like 20 positions. Yeah, that's ultimately where we want to get to, right? Like we want to be so good at our craft that we literally just don't even have to think about it. It takes like 2 brain cells to process trading.
Yeah.
Yeah, but we'll get
I think
there.
it's giving me more confidence too, because at first I was just looking for like the playbook breakouts and fakeouts, but I didn't have that much confidence. Like I get it's a breakout, but with liquidity in mind, you kind of get the whole structure. It just makes way more sense. Like, okay, this breakout actually makes sense. I'm not gonna like,
Yeah.
you know,
Yeah. I would say that like I would say the main thing that Don has been improving very consistently on is finding confirmations for trades. Like the breakout was a pretty strong confirmation, right? A fake out was also a confirmation, and then like a celery is also another confirmation, right? All of these are confirmations. Then once we added liquidity, that was another strong confirmation, right? Liquidity plus flip, liquidity plus breakout or whatever. These are all very strong confirmations, and in your mind, you'll like over time you'll get like a sense of how strong each confirmation is and the combination of different confirmations. Like for example, like if you get a breakout then a wick entry, how strong is that compared to like a breakout celery, right? You can't measure it directly, but you can measure it in the context of price.
yeah.
Yeah, and then as you continue to build that experience, that's when you start like understanding your own kind of trading style, what you're able to catch in the markets, and so on. But yeah, just this is why I wanted to do this, right? Like this is why I wanted the zooms as well, because like
You know what
so
would be a good idea for when we do, if you do the pairs, and when the journal comes out, we could just like pair up and then go through our trades and then go through our journals.
yeah. So I'm waiting for probably a couple more people to join. Like we have, I think, like 13 people, 12 or 13 people. I'd like to wait till we get like 20, so like 10 pairs, right? And then after that, I'll probably get you guys to. I'd like you guys to use the new journal, which is probably coming out this week. Did Don mention anything about the journal on the stream today?
Yeah.
Yeah.
He showed us a bit.
Yeah, basically, like, I finished off the journal yesterday, so it's basically ready. And then, like, essentially, once we get people paired up and you're using the journal, then at that point, you can compare it a lot easier, right? You can compare your win rates, you can compare certain things. I added a certain, like, and also because you guys have access to me, right, with the membership for EvolutionDVS, you can ask me about the journal at any point. Because the journal, like I created, I know literally everything about the journal. So
Yeah, just
When does that?
so-
When does that come out?
well, hopefully this week, like end of this week, I would say. Like, well, it's ready. It's just when Don wants to release it, I guess.
Yeah, true. Sounds good.
Yeah. But yeah, that's another like advantage of being a member on here. Like you just like it's not just analysis asking. Like there's also a whole lot of psychology stuff, personality, like trading personality, and all of that comes with trading, right? So I touch on it in the journal where there's a bunch of. Can I even grab it out? Like, yeah, this. Like all of this stuff, like, you know, I touch on key psychology kind of points, and then there's all like how you use the trading journal and everything. But you guys will go through this as you go, and if you have any questions, just ask me in terms of like how you enter trades and whatever. But yeah.
I think it's nice with the multi time frame like
Yeah.
addition journal because like for today, for instance, I think I had like the 4-hour and hourly like lineup as well as like there was some celery stuff on like the 30 and the 15-minute stuff.
Yeah.
The cells.
Yeah,
Just like
yeah.
extra type stuff.
Yeah, for sure, for sure. Because it's like, especially when I first came to the streams, I was like, oh, okay, you're using the 5, but it's also like the 1 hour is making sense, right? Like the 5 is making sense, but the 1 hour is like, I would say the stronger confirmation. So how is this not recorded, right? And then I want to understand, like, for my future trades, if I'm trading based off the 1 hour, what's the win rate there?
Yeah, definitely.
Yeah, but I would say with the new journal, because it's so complicated, you will need hundreds and hundreds of trades entered before it starts producing good results and good like statistics for you.
Yeah.
So take your time, like really take your time, and don't like just because I said you need thousands of trades potentially, don't go and just take thousands of trades, right? Like still take high probability trades, and then after that it'll slowly build up to you, because you want the journal to be high quality, you want the data to be high quality.
Definitely.
Yeah. But yeah, sick guys. It's about an hour. I'm gonna call it here. Yeah. W stream. Thanks for joining up.
The recording.
Thanks, Alvin.
What was that, Tom?
I was talking about the recording today.
Yeah. Recording's fine because live, YouTube live. Alright, so they're all good.
Yeah, brilliant.
Yeah, cool. Alright, I'll see you guys tomorrow. But yeah, cheers guys for joining up.
Peace.
Cheers YouTube for stopping by. And I'll see you guys tomorrow for another free breakdown. I think Nightbot has been helping me push membership for EvolutionDVS. As you can see, a bunch of people on the Zooms. That's kind of what I wanted, that kind of level of interaction. Currently, I think the price has increased to $40 a month, which is still only like $2 per breakdown. But I would say there's probably limited spaces left. I can't handle like 100 people on the calls, right? So at a certain point, there's going to be a limit, and then we're going to cut it there in terms of the amount of people that I'm going to allow on the call. But yeah, so just let me know if you want to join, because I'm also looking to pair people up with the existing members, with new members, so that there's a whole kind of trading community going on there within EvolutionDVS. But yeah, sounds good. Thank you for joining, guys, and I will speak to you guys tomorrow. If you are trading Asian, right, just make sure to have a stop loss, have an analysis. I think I saw somewhere that Wix is not trading, so just be careful. Yeah, just understand what you're trading. Obviously, test your ideas, and be brave, right, if it's your plan. But yeah, just stick to what you usually do. But cool. I will see you guys tomorrow, and thank you very much for joining up. Peace.